Carry on my wayward son. There'll be peace when you are. Welcome to Insights. I'm Eric. Thanks for joining us. Today we're going to talk about live cattle. Live cattle is down here in the extras of the DI readings. We talked about lean hogs the other day, and we're going to follow that up with live cattle, which is right underneath it. It's WA is 96, 3 and minus 8. And if you click this link right here, you subscribe to the Matrix, you can pop up a fixed DI chart, and we're going to talk about that. And we're going to talk about who drives the live cattle market and where the consistency lies in timing. It probably goes a little bit deeper than the DI. In general, if people are interested in cattle and trade it, there we can certainly consider opening up a cattle report because it is something that takes an extra step to look at, and we're going to talk about that right now. So I'm going to open up my dynamic matrix. If you want, you can click this link right here, and you can pull up a chart that's going to look like this, and then we're going to talk about some of its limitations, and then we're going to make some modifications to it. Here's live cattle, and it's live cattle through 2004. Actually, I probably could extend this out to 2000 since I've done all that with all these DI charts. It goes back, and we're trading fairly regularly higher. The primary trend is up. This is updated inside the matrix. The computer updates the primary trend just like lean hogs. It is a bigger market. I do keep an eye on them. Sometimes I do trade them. Lean hogs I tend to trade more because it's a pure energy build follower. What I have found is live cattle doesn't appear to follow energy builds as much. They get muted. As you can see, they don't cross above bullish thresholds as much and bearish thresholds as much. But what they do is and we're going to see in a second, it's kind of dampened, but we're going to see where the amplitude lies. And here what we have is right now I have both bullish and bearish, and you can see that in most cases these highlights. Let's take the bulls to start out with. The bulls marked by green cups, they generally mark opportunities. Now DI looks at the sum total of all energy, of the sum total of energy built across all participants inside the COT report. And it's not just one group, it is all groups, and it's the movement of groups, and it's relative. It's not based on a percentage, it's based on the relative movement over time, and it's not a fixed database of time. And look back of 2-3 months. It's a dynamic viewpoint of time. It's not static. The computer adapts to what the market is doing. If the market is far more volatile, it will adapt to that. This was my attempt to adjust the power of the DI energy builds like I've done in other markets, and you can see the number of highlighted boxes decreases, so the number of bull entry points doesn't seem to help too much with live cattle, and that has been my experience. Whether we use the traditional calculation or the a more advanced one, and even when I narrow them down to look at where the participation lies, you can see it. You don't get a lot of signals, and that doesn't help anyone who's forced to trade or trying to decide how to time. You can't use any of this stuff. I mean, this stuff is generally not included in the matrix. But what I found is that there is a specific set of players that really dominates the cattle market. And I'm sure the people who are involved in producing probably already know that. It is the commercial traders. And I'm going to flip over to this next tab. And this is what I track. And then this is not inside the matrix. It could be, probably substituted in there, or I could start a live cattle report to talk about this stuff and to keep an eye on it. But it really just depends on what everyone's interested in. In general, what we have here is as the two major players. There's actually multiple players, but I've separated the two major players. This is the commercial traders, and this is the non-reportables or the retail traders. I find that the dominant group, and you're going to see it here, I'll show you, is really the commercial traders. And we're going to take a look at the commercial traders here. I'm going to isolate them down here. Everything that's above 75 or roughly 80 is a buy opportunity. Everything below 25 or about 20, 0.25 or zero point 0.2 is a selling opportunity. Or it's easier, it's kind of like I would put it into a blocking dome uh, um, bullish cup. The point here is whether you're using this or where we're using the advanced calculation, which adjusts for power. You can see that in general, when these readings spike above 80, we'll call it that, they do represent turning points within the market. Now I can go one step further, and this works pretty well, where I modify the calculation based on participation and uncertainty. First, I'm going to do participation. And you can see then we cut down a lot of the highlight boxes and we focus on the highlights that generally turn the market. If I move these over and I put that there, you can see that there's cups, and there's cups. There may be a cup here. They tend to form when participation is low, and whether you're using this or you're using the other calculation, they do show up, and when they show up, the price tends to rally. Oftentimes, it's a pretty immediate rally. Sometimes it's a reaction before, and then perhaps it gets continuation. But in general, the odds favor some type of reaction. So if you're looking to make a decision on the margin, when you have a white highlighted box here, and you have, and what it's telling us is that the commercial traders are bullish. They're all above this line here, and they're bullish with certain circumstances. Here's the bullish builds that reflect uncertainty, and you can see they're even narrowed down even more, and these are actually quite good at picking up reactions or temporary declines. But in general, when you see these types of setups, you better not be short the market, and you better be looking to buy or make some type of bullish decision. And the opposite can come true as well. If I highlight the bears and we look in general, it tends to slow rallies, but it's not quite as effective as a buying technique. And we're going to take a look at WA, which is this traditional calculation, and we're going to look for when the market is quiet. You can see they tend to show up here. They tend to show up here. It tends to slow the market down, but it doesn't reverse it. A lot of this stuff has to do with whether or not a trend is extended. Again, these are highlights, and it sent the market down. Here was a highlight, sent the market down. Here's a highlight, sent the market down. Here was a highlight, it continued to rally, but then it fell back down, probably lower than where it first highlighted. In this more recent rally, these highlights have slowed the trend, but it's powered through them, which reflects the amount of buying power that's taking place inside the live cattle market. But the bottom line is the commercial traders do really they tend to control the trend. And if you're in a bull market where the primary trend is up, and you can see that here, we know that the primary trend up, this isn't the regular DI chart. It is unwise to step in front and to not buy the dip when the primary trend is up when you have a white highlighted box. So that's really the things that I've learned to use inside the matrix, and one step further. This is the commercial traders and the non-reportables. This is the regular DI chart that's inside the matrix. It's useful to tell you where WA lies, but this has gotten more muted over time. Perhaps the commercial traders have come to dominate the market. So it's not as reliable as it used to be up into 2016. But when we spread those things out and really decouple and deaggregate the DI into some of its components, we can better see what's taking place. So I'm going to head back to the matrix. DI in lean hogs and live cattle is down in the extra column. We also follow lumber and heating oil. Lumber is particularly interesting market to follow, but these are the two markets that we keep an eye on pretty well. If you're using the matrix, I would recommend watching those energy builds fairly closely. And if there's a lot of interest in terms of like timing cattle, I can open up a report and keep an ongoing look that will keep track more of the separated components of the DI to give people a better, a little bit more help if they're forced to trade it all the time. If you have any questions, let us know. If not, keep an eye on this stuff in the Matrix. And thanks for watching, and we'll talk to you guys real soon.